Hey everyone, in this video I'm going to answer which one I think is the better home improvement stock to buy. Is it Home Depot or is it Lowe's? Now to answer that question, I'm going to look at revenue, profit margin, cash flow, and valuation to then answer which one I think is the better buy. So let's jump right in with revenue. And looking at the last decade of revenue, we could see Home Depot outperforming Lowe's, growing to revenue of 154 billion compared to 93 billion for Lowe's. Now remember, the home improvement industry generates over 900 billion in revenue annually, and so these two companies, even though they're massive in scale, can still grow further. There is room to expand more because the industry is so large. The next thing I wanted to look at is their operating profit margin. And Home Depot not only generates more revenue than Lowe's, but it also operates at a higher profit margin, at a considerably higher profit margin, 14.88% in the most recent update compared to 10.51% for Lowe's operating profit margin. And this outperformance from Home Depot is not a one-time thing. If you look back over the last decade, Home Depot has consistently outperformed Lowe's in terms of the operating profit margin. The next thing I wanted to look at is cash flow from operations over the trailing 12 months. And again, similar story here with Home Depot outperforming Lowe's, 19.64 billion in trailing 12-month cash flow from operations compared to 8.54 billion for Lowe's in terms of cash flow from operations. Now, the interesting story lately for cash flow from operations is the huge fluctuations of inventory for both of these companies. Remember, during the earlier stages of the pandemic, home improvement experienced a huge boom. People were spending more time at home, and so renovating their house was a popular activity. Painting, adding an office, adding some outdoor barbecuing space, and things like that were very popular during the earlier stages of the pandemic. And so these two companies front loaded a lot of their inventory that they were going to bring in over the next couple of years, because remember, supply chain shortages and shipping challenges were plaguing many businesses, and so they decided to bring in their inventory early. And so that brought down cash flow from operations in 2021. You could see that downward trend for both Home Depot and Lowe's, because when you spend cash to bring in inventory, that's an outflow of cash. That's cash leaving your company. But now that the home improvement demand has slowed, Home Depot and Lowe's have anticipated that slowdown, and they've reduced inventory purchases, and they're letting their inventory wind down, and that's creating a boost in cash flow from operations for Home Depot. Not yet the case for Lowe's, but Home Depot seems to have managed this inventory up and down very well, very well. And finally, I wanted to look at valuation. And Home Depot is the more expensive stock, trading at a forward price to earnings of 19.89, while Lowe's is trading at a forward price to earnings of 15.12. Now, this decision is very close for me because, yes, Home Depot is the better performing company. It deserves a premium valuation, but Home Depot is trading at a price to earnings ratio more than 4 times higher than Lowe's. So Home Depot at 19.89 is about 4.7 PE higher than Lowe's at 15.12. So yes, you're getting a better company with Home Depot, but you're also paying a significant premium over Lowe's. However, that being said, even though it's a really close decision, I would still go with Home Depot if I was to pick one of these two home improvement stocks to buy today. The outperformance in terms of revenue, cash flow, and profit margin, in my opinion, is enough to justify this premium valuation, but just barely. Overall, I have both of these stocks rated as a buy. So if you're torn between these two, just split up your money and put half in Home Depot and half in Lowe's.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.